Hello, good afternoon or good morning, either one, depending upon when you get a chance to watch this video. My name is Doc C, and I'm the president CEO of Cochran Consulting, LLC, a firm located in wonderful California. And today's topic, well, actually all topics that we actually discuss is business in the 4 cycles of business ownership, which is part of our E4 math philosophy system. E1 is entering business ownership. E2 is evaluating business ownership. E3, enhancing, and E4, exiting business ownership. Today, we're going to talk a little bit about the evaluation. Okay, I'm going to share my screen. We're going to talk a little bit about it, about business owners and how they need to think as business owners, and then of course we'll conclude on showing our website and a variety of other things. But let me just say this: if you would like to reach out and you have a question, comment, please, you can contact me at cochranconsulting@yahoo.com or Curtis at ccochranconsulting@yahoo.com. Either way, please reach out to us. We are inundated with emails and questions daily, and we're trying to get to a lot of these videos to answer some of those questions. So if you have a specific question about one of the videos that we have posted on social media and whatnot, just kind of highlight that video with that question would be great, and then we can go back through and answer it. Okay, let me share you my screen here. One second. Let's see here. Bear with me. Bear with me here. There we go. Okay, so what I want to talk about is your evaluation or evaluation. This is a particular evaluation we just completed, well, not too long ago. I thought it would be a great example. And we do look and evaluate a business anywhere between 3 to 5 years. Tax returns, P&Ls, those kinds of things. And in this particular case, we dated back from 2022 to 2023 years. And we finished this in, I think it was January or whatnot. But to take a look at it, let me just, I'm gonna speak through a few lenses here, specifically a lens through the eyes of a buyer and then that of a seller. Okay, so this is obviously a seller, so the buyer is first of all going to look at, and that's why we will have, as I go through this, in the right column here, I will have a 1, 2, 3, 4, and these are the notes to illustrate what I'm talking about this P&L. For example, the business sales, note that it's increasing from year to year, a certain percentage, say 10% or whatnot. And then number 2 there in other income, as you can see that the other income is quite small and adjusted. So it's really kind of, I don't want to say it's irrelevant, but the side note of number 2 is just miscellaneous income, selling assets or business assets and stuff like that. Okay, so if we scroll down, pretty standard, you have direct labor, other costs, purchases, cost of goods, all that. So the gross income, nothing too fancy here. But when we go down to the operating expenses, you'll see the amortization is adjusted to 0 for each of the 3 years. And of course, the reason is recasting. We can zero out amortization and interest to zero, and that's the purpose of doing that. So it's actually a way of putting dollars back into the business itself. Another thing that I want to look at is number 4. This is the beauty of evaluation, and this is why it's an art rather than a science, although there of course is mathematics and so forth, but it's human behavior written all over it. Okay. And if you take a look at the adjusted year here, 2022, the owner compensation officers were making 600. We knocked it back to 250. Okay. And 266 this year and 267 this year. The reason is that's what we feel that a CEO of the company would get paid. So they're getting paid some big major dollars. So there's recasting there. Contributions and charity, again, we zeroed that out, very minor. These are discretionary items. Depreciation automatically zero itself out, adds back in some dollars. And excuse me, and scrolling down, I'm not going to go into each one of these items because each P&L is different, as you know. Rents and leases, of course, there's some changes there due to COVID and whatnot, and that was 2022, which is good for the owner. And then let's go down a little bit further. Again, we deducted some because after interviewing the owner, there were some discretionary items, so we decreased that a bit. So if you take a look at this, the taxable income for 2022 is 277,368. And then for 2020 or 21 is 153, and then 272 for 2020. But when we go to recast and put dollars back into the company, because that's exactly what is happening here, is that most businesses, they run their life through the business. Okay. And so we have to recognize and identify those dollars that can be recasted. And so the available cash flow, ACF, is actually 771,000 in 2022, 605 in 2021, and 2020 was 614. So it's obviously increasing. So what we do is we select a 3-year average, which is 690. Okay. And then we have a 5-year kind of a weighted average if that was the case. But the trend adjustment is about, 850,000. That's the trend adjustment. But this number here, the 690, is going to play an important role. All right. So that's the P&L. A lot of things going on with the P&L, and there's a lot of hours spent on the recasting process. Now let's go to the multiple factor. Okay, so we have certain questions that we ask, and we try to get a multiplier. Now, as you know, companies usually sell between a 2 to 5 multiple, dependent upon, the industry and dependent upon the business and whatnot. Okay, so we ask these questions. So question number 1 there is this continued earnings risk assessment for the new owner. Well, we figured the owner or the seller figured that steadily increased stable earnings likely. So it gave it a 4 here. And we go through all of these with the seller. Okay. And that's where the art comes into play. So in this particular business, we come down with a 3.28 multiplier based on these questions that we ask. Okay. Capitalization rate, 31%. The total score of the risk is 59. That's based on our particular data. And so we get a 3.28. Okay, so now the next step. So after we do that, we come into the valuation. Okay, so the preliminary value is 690. Where did we get that? Remember that average cash flow? Okay, back over here. Let's go back here. The available cash flow and the 3-year weighted average was 690. Okay, that's where that 690 is coming from. The multiplier, we just showed you the multiplier is 3.28. So right now, this company is 2.2 or 2.2 million. Okay, so it's worth 2.2 million. And then, of course, we look at the cash and equivalents. That's 212. And again, these fluctuate. Accounts receivable, 418. Prepaid expenses, inventories, 539. So liabilities, we have 517. So the business valuation ends up to be about 2.9. Okay, so this, we could actually be comfortable in taking this to the market at around 2.9. Okay, we understand that there's some variability there. Okay, but that's what is so important for both buyer and seller. Seller obviously wants to make as much money as they can. The buyer wants to pay the least that they can. And that's, but this is where you need an evaluation. You need evaluation because you have to have a starting point. Okay. Then when you get in your boardroom, who knows what's going to happen. Okay. And we'll talk more about that too. Goodwill calculation, the goodwill preliminary value is 2.26, less liquidation value of furniture and all fixtures and so forth. So it's about 1.8. That's goodwill. So if somebody looks at a goodwill versus the price, you know, if you look at it, 1.8 or 1.9 to 2.9, that's $1 million differential. Okay. But you understand goodwill. All right. So then once we get to there, then we go to what we call the buyer estimated cash requirements. Okay. So these are scenarios that we put in and put in this in the evaluation just to illustrate this for buyer and seller. So in this particular case, let's say the calculated value is 2.9, purchase price is 2.9, operating capital is 219, professional fees and closing adjustments 24,000, total cash requirements 3.2 million. Okay, that's, again, these are just estimates, but it's good for the buyer and seller to see this. Amount to be financed, let's say it's 728, amount financed by the seller, other would be another 728. So then the total amount to be financed would be 1.456. Total estimated cash required 1.7. This is from the 3.1 million that we had up there. So the total cash deposit 200,000. So cash, total cash required at closing is 1.5. So these are scenarios. Of course, they're just something for both buyer and seller to think about when it comes to selling and buying. And then, of course, you have the worksheet professional fees that come into play, attorney fees, accountant fees, inventory adjustments, a variety of other things that come into play. That's where this total fees and closing adjustments, the 24,100, which was, it's on the other sheet. Yeah. It's on the other sheet, but that's where the total fees and closing costs comes from. Then we come over here. One more thing I want to show you. We have the return on investment. This is the best part. Going through this particular purchase, projected cash on cash ROI is 38%, overall 35%. So we play with those kinds of numbers for you. Now, let me go ahead and just stop there. There's just such a lot of information to look at. So let me go ahead and stop there. And then I want to share you our website. Okay. So today's quick little lesson is valuation, what really is the process. We use 11 different formulas to evaluate a business. And that was just a kind of a screenshot on what we do, looking at the P&Ls and the recasting process. Yeah, the website. Let me go to show you the website real quick. Share here again. 1 second. Try to do this real quick here. Okay. So our website, there it is, Cochran Consulting at yahoo.com. Well, that's my email. So the first thing that we want to point out, if you want to get your Z-score, this is so easy to see how your company is doing, how healthy it is. Cochran Consulting Z-score, click on this. It'll direct you to this page. You fill this out and send it out to us, and we will reach out to you and find out some information to find your Z-score. The second tab that I want to talk about is executive coaching. And what we do is we help build businesses through executive coaching. But here's the best part. If you scroll down here, talks a little bit about it right here, but if you scroll down here, it says here, click here, how to increase the value of your business up to 71% in only 12 months. Okay, so reason why we say up to 71%, it's kind of an average. We increase it even more or even less, but we say 71% to guarantee 71%. And if we do not reach 71%, we will refund the $120. It's no gimmick. We're telling you, up to 71%. So let's say that if we, increase your company, say 40%, you'd probably be happy about that. But if not, we'll refund that $120. Guaranteed. I guarantee you we will help increase your business. So that's this tab. And then if you go to the one right below there, it says free success roadmap. This is what we do. You can go over here and click on here, get yourself a free PDF making businesses profitable and sellable. And this right here is a roadmap for you. You can learn about the entire process here. Am I worried about you taking this and selling your own company? Not a chance. Malcolm Gladwell's Outliers, you need 10 hours. 10 years to become an expert. We've been doing this for 35 years. So we know what it takes. It's really difficult. So it's all, this is yours free. Then I want to go down to our books. Our most important book is this first one, The Semantics of Mathematics. This is it right here. This is all you need to know in Business 101 and 102 and 103. It goes right to Amazon. You can buy it for $20 or $9.99. If you are running a business right now, or you're thinking about running a business, you need to buy this book. I'm telling you, this book has more information in it about our 4 cycles and the 4 cycles of business ownership. I'll say it again: entering, evaluating, enhancing, which enhancing is most companies are going through the enhancing stage, and then exiting. You will either, well, let's just say this, you are either going to exit because you want to, or you're forced to. And that's either because it's going bankrupt, or you're in a pine box. That's just the way it is. Okay, buy this book. Trust me, this is going to save you some time and money. All right, and the last thing that we want to talk about is our nonprofits. I just love the 2 nonprofits. I'm the president of the board of each one of them. The first one is called Future Cycle Breakers. The mission is to create opportunities for generating wealth in underserved communities by providing entrepreneur readiness. So summertime. This summer, we're asking for donations because each summer what we do is we put on these little educational retreats for entrepreneurs. And to know more about it, click on that picture and it will show you exactly some of the programs, the actions, and all of the things that we do here at FCB. You can click on donate right here. We're looking for donations, or you can come down here and click to donate at FCB, and $10 would go a long way for us. Just $10. Okay, we're going to try to put on as many of these retreats as possible in the summer. Okay, so that's one of our nonprofits. The other one is Straight Talk. The mission of Straight Talk Counseling is to make available a variety of mental health, substance abuse, and rehabilitation services to individuals and families that are, of course, need that. Now, once we do that, we get them back up on their feet and we teach them a little bit about entrepreneurism, which is exactly what we do for SEV and exactly what we do here at Cochran Consulting. Okay, so if you wish to contact us, you can click on the contact button. Of course, that it will get you to our contact site. Or like I said, you can email me at cochranconsulting@yahoo.com or ccochranconsulting.com. It is a pleasure. I just blah, 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 but it is always a pleasure. Anybody that's watching our videos, I thank you, and believe me, I will answer any questions. Actually, any questions that you throw at us. My degrees go from mathematics all the way to 2 doctorates, one in organizational behavior, one in metaphysics. So I understand a lot of the moving parts to not only business, but to life in general. So please feel free to email me at any time. Be happy to answer your questions. Again, this is Doc C. Thank you again for listening, and you take care. Bye-bye.